The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
And it's time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. Happy Friday, Nick.
Good morning, and what a Friday it is.
CFTC, they seem to have penalized somebody, correct? A DAO. I kind of want to read this tweet here from Punk6529. Let me read this to you here because this might, let's set the stage. The CFTC bZeroX / Ooki enforcement action is interesting because of the last paragraph, namely that the CFTC just looked through the DAO, or quote DAO, and said it was an unincorporated association and the individuals are responsible. So that's a kind of like that's not necessarily a small thing, is it?
No, this is going to be a very, very interesting case. So I think we got to really just go through everything that happened yesterday. I'll be brief, I promise. But there was a couple different things that happened, right? So first, the CFTC brought in an order saying they settled charges with bZeroX and its founders, Tom Bean and Kyle Kistner. And the charges are pretty straightforward. bZeroX was a centralized company that operated a decentralized leverage and margins trading protocol. Basically, let whoever go ahead and conduct leverage trades. They did not conduct KYC. They did not register as a futures commissions merchant or go through any of the processes that the CFTC would normally expect the operator of a leverage trading desk to go through. Fairly straightforward, makes sense. We've seen this before. None of that's new. In August 2021, what bZeroX did and what the founders did was basically turn over control of the entire protocol to a DAO, to what at the time was called the bZeroX DAO. And the DAO basically, it seems to have functionally just taken over everything that the company did. And the CFTC says, all right, so this is an unincorporated association. Looking at federal definitions saying, okay, this is a group of people who voluntarily participated in this process, but they are doing the exact same things. And the CFTC, throughout the various documents, really hammered in on this idea that what the DAO did and what the company did was the exact same thing. So
it's like an investment club.
Basically making this argument that the DAO was now the operator of this, unregistered futures commission merchant and was operating the exact same, leverage trading products and everything that it was before. Only now, instead of just two individuals controlling it, you have whoever operated the DAO. Now, where things get really kind of interesting, and this is where we're going to start seeing a lot of, I think, debate, is, the first two allegations and claims, again, straightforward. We've seen this before. It's not a surprise. Now, what the CFTC is trying to do is say, all right, each of the people who, A, holds tokens for the DAO, and then B, voted with those tokens, is individually liable for the actions of the DAO. And this is the part that's really causing controversy because, first off, this is unprecedented. We've never seen this before. Second off, as we saw in the dissent of CFTC Commissioner Summer Messenger, there's some debate as to, whether there is legal, authority for making that allegation and claim. And so what we're going to see now is a lot of debate, I think, between attorneys and regulators as to, all right, so who is responsible for the DAO's actions? And is the DAO itself legally liable? And that doesn't even get to the practical questions of how is the CFTC going to identify the other individually liable members of the DAO and verify that they were voting token holders?
If all the DAO members will be served does this mean down the road we'll see them all served individually?
Maybe, I think. And that seems to be where the CFTC is leaning. But how are they even going to identify? Also, my curtains just collapsed, so it's been a great day this morning.
This is just
how are they going to identify, all the DAO members? How are they going to? And then also the other weird part is like you're going to draw this distinction between someone who holds tokens and someone who voted with tokens, and
Right.
the CFTC commissioner's dissent says like that creates winners and losers, because of chance. Because say you happen to miss the vote, then okay, you're not charged. It's very weird. This is going to be such an interesting case to
if you
follow.
voted, what if you voted against doing something? Would you be liable if you voted against doing some leverage trade? And
it doesn't matter like what you voted. That's the mere act of voting says you participated in this governance process, and the CFTC's allegation.
And how many people are
right,
we talking about, like implicated in this?
Honestly, that's a good question. So I took a peek in the Ooki DAO. Ooki DAO, by the way, is the rebranding of the bZeroX DAO, so same entity, just a different name. I took a look in their Discord, in their Telegram groups. Not a lot of activity. The Telegram had like 4,000 people in it. The Discord had something similar to, or I think less than that. But there were not a lot of messages and not a lot of activity. So maybe I'm not looking in the right places, but it didn't look to be particularly active. But I will say,
it reminds me
if
of
the CFTC
something
was
that
looking
Gary,
for...
It reminds me of something Gary Gensler said, that a lot of individuals who actually run companies are hiding behind the idea that they're a decentralized autonomous organization, when in fact the reality is it's just in the hands of a handful of people.
That very well may be true, yeah. And the CFTC is now saying, yep, decentralization is not defense. And honestly, if they were looking for a good example of a company that tried to turn things over to a DAO and then did the exact same thing, this is probably as clean an example as they'll find, because they have quotes from the founder saying, hey, by the way, we're going to turn this over to a DAO because it's going to make it regulator proof. And the CFTC followed up by saying, wrong, that is incorrect.